Good morning, everybody. Today is January 30 at 9:20 New York time, and today we're going to be giving an update on Bitcoin, on what is happening, and also where is Bitcoin most likely to go next based on the price action. So, going over yesterday, we were talking about how if it knocked out this level of support, that is going to be a bad sign, especially if it breaks through this one, since this has acted as a certain level of support a few times, multiple touch points. But we could see yesterday there was a very clear, strong pullback and a break of this level of resistance, and then it broke through this level of resistance. But you can see that it closed above it, which is a positive sign. But as of today, it open and then is now pushing through down to this major support area. Now, this is a major support area for a few reasons. One is that it's had multiple touch points, and two, it is a nice even round number. The 80K is a certain level of support, as well as it was the bottom of this reversal extension. So we have a few different reasons why this would be the major support. Multiple touches of this area acting as support and resistance. We have the bottom of this reversal extension, which is also the bottom of this bear flag from the all-time high to the bottom. So these are some of the reasons why this is, and that this is a nice round number, 80K psychological. So that's a few things. We could see that price hasn't gone down and touched that support yet, but we'd want to see that this holds and that price is able to consolidate between the 50-day, 20-day, and this major support if we want to be able to see a trend direction change to the upside. But if this does not hold, if the 50 and 20-day continues to act as resistance, if this support breaks down, then where are we likely to go next? Well, if we're going through our checklist, we can see that we've checked off everything of this being a stage 4. The only thing that we haven't checked yet is the 50 to 80% decline below its highs. Right now, as of today, we are 35% below the all-time high. So we have yet to get to the 50 to 80%. And we checked off some of these mature decline signals. But the thing that we've been talking about now for quite a while is that even though we identified that this was a reversal extension, so we could see that price got exhausted, it pulled itself back up, and then it tried to change the trend, but the trend was not able to hold, and it broke down again over here. So the thing about reversal extensions is that you can continue to have more reversal extensions on the way down. You don't just need, it's not just one. This could just be a floor for this move, and then it goes down. It's the same as when you have an uptrend. It's the same as when you have an uptrend. You'll have these areas where price can get exhausted, and then it'll pull back, and then it'll continue again. That is called a continuation play. You can see over here, it got exhausted, it consolidated, and then it broke out again. It got exhausted, it consolidated, and then it broke out again. It's the same way, except on the downside. That's the reversal. So it gets exhausted, it consolidates, and then it can break down again. It gets exhausted, it consolidates, and then it can break down again. And that can happen multiple times. Like over here, we could see it broke down, it got exhausted, and then it had a continuation, and then it broke down again. It got exhausted, it consolidated, and then it broke down again. And then it did this multiple times. Same on the way up. It gets exhausted, it consolidates, and it can consolidate for quite some time, and then it breaks out again. Exhausted, consolidate, break out again. And that's the stair step pattern that price action does on the way up and on the way down. And then when it's going sideways, then that's just more of like a distribution phase. But sometimes it can just be a continuation to the next leg up until it starts to break down when the moving averages meet up and the major supports break down. Then it turns into a downtrend. So that's just how price action works. So we're seeing that play out right here. So where is the next logical step? Well, if we haven't gotten to 58 to 80% below the all-time highs, where is that level? Well, we have to line that up with what is the major support areas. And as we can see, if we get down to the 73K, why is this the major support? Well, we can see that it has multiple touch points, and that there's a range that formed over here during this period. There was a range that formed. And we can also see that price has tested this area as major support, and that's where it was able to find from the April lows. That's where it found support, and then it did that stage 2 rally. So this is a major area. Once we break through this 80K major support, again, this is why this is the major support, the next place it will test will be the 73K range area. So once it breaks through here, this is the first one, major support. Once it breaks through here, it will go and it will test this 73K. Why would it go from here to here? Well, because there's a gap. And when you have these gaps, there's not a lot of price action that happens in this area. So price wants to fall to the major support or rise to the major resistance. That's how price works. It always finds these areas to test and see, are the buyers and sellers actually interested in holding this area? If the 80K does not hold because not enough buyers are willing to hold it at this price, price is going to go and test and say, are the buyers willing to step in at 73K? If it can't hold at 73K, and there's a reason, and the reason why 73K might not hold is, look, 73K from the all-time high to the 73K is 43%. That is not the 50 to 80% of a mature decline that shows that this is this is typically where stage 4 declines bottom out. So if this breaks because there's not enough support there, where would be the next logical area? The next logical bottom is 58K. 58K, and the reason why 58K is because it's had multiple touch points. And sure, you could draw this a little bit lower if you want. You could probably move this down maybe to over here at 53K. You could maybe get to 53K there. I'm just putting it right here just because there's been multiple touch points here in this area. But it very well could find support right there. I mean, there's the touches there. There's the bottom right there. This was a very clear reversal extension, but price closed up above this area. That there is good reason to believe that that could be the bottom right there. And then if we just drop this down a little bit to there's that 60%. So going down to the 60%. Maybe we'll just leave it there because I think that this is a cleaner trend line. There's much stronger support right there at this 52K area as opposed to the 58K. Again, I'm working this stuff out with you guys. I'm not claiming to know everything. I'm just using what I've been learning. So we have 53K major support, 60% decline, 62%, and that would fit within our mature decline. Okay, well, what if 53K doesn't hold? What's the worst case scenario? Worst case is it goes down, 80% plus. I mean, it could go lower, but the reason why we might not find these areas more so, is because it is such a wide gap between. Over here, it makes a lot more sense. Going from 80K to 73K, that makes sense. Going from 73K to 53K, that makes sense because look how close this area is between here and here. I mean, it's not that crazy to get down to the 53K area. What does seem a bit more extended would be going down to the 25K area. That would be pretty extreme. Why would it get to the 25K area? 25K area? Well, because that's the bottom of that base. Another area that it could also find would be this 30K. Also potentially 40 and 46. I wouldn't start counting these yet until we see that price is in this area, and then we could say, okay, this would be the next. But right now, we should just be focusing on this area, this consolidation zone. That is the most logical next step where price will want to go to based on the price action. Once it breaks through this 80K, more likely to break through the 73K if the 80K starts finding resistance. So if this support turns into resistance, then there's more of a case to be made that price is going to continue down lower to the 73K into this consolidation zone. So that's what we're looking for immediately next. Until price action tells us something different, that the trend is changing, where we have to continue to look at this objectively in the way that it's playing out, where the trend is going. The trend is obviously going down. Price action is supporting price going down. So that is what we need to analyze it with. But as soon as the price action starts giving different signs that it's going to turn into a potentially a stage 1A, a early basing phase, or a stage 2A, an early uptrend phase, we have no reason to believe that's going to happen yet, though, because price is not showing those signs. So that's why we have the checklist. That's why we go through. That's why we analyze price action every day, so we can see, where's the next logical step. So also relative strength. Another thing just to take notice of relative strength. It is dog water. I don't know. It's dirty. It's bad. Relative strength, PCT rating D, 52 week lows. This is showing that this is very, very weak against the S&P 500. So it's just not performing well, and that weakness can cause price to drop even further. If we look at some of the other market participation indicators, relative strength, coins showing relative strength, only 49. Looking at the top gainers and losers, this is pretty short term, but we could see top gainers not looking good, top losers also not terrible. This could definitely be a lot worse. The altcoin market seems to be holding up relatively well in comparison to what Bitcoin's actually doing. Looks like we could be breaking through this area. So we had this $100 billion or $100 million, $100 billion move, and then all that was reversed. All the money has been taken out, so we could see money just start to bleed out from the altcoin market. Liquidations, some on-chain liquidations hit a new, continue to increase. So longs continue to get liquidated. Shorts, it's convincing the longs to go short. You get enough of these spikes, and then people will probably change their tune. ETFs, looking at the ETF flow. Last update was on January 29th, so yesterday, and we could see ETFs are continuing to outflow. Not as much as on January 21, but still a very sizable amount. Coins above the 200-day. Still bottoming action, 15% above the 200-day, so not good. Fear is definitely, it spiked up, but fear can definitely spike lower. But a lot more fear. Looking at the revived supply, yeah, it's just kind of dwindling down. Nothing too much happened there. So we have to see what's going on. Is price going to find support on the 80K, or is it going to break down? Is price going to have a short-term rally, try to test the 20-day, 50-day again, get rejected, and shoot back down? We'd want to see price start to reverse the other way if it is going to change the trend. But as of right now, it's not looking good. And just real quick, just to see what's going on with the rest of the market since it just opened. SPY. SPY is going sideways. NASDAQ. Again, kind of flattening as well. It's not a very strong trend. QQQ. Sideways, not very strong. Had a nice close the other day above. It tested the 50-day and closed above the resistance. But today it looks like it gapped down below. Small cap stocks, Russell 2000. Not good. I mean, it's pulling back to the 20-day. If it's going to find support on the 20-day and then continue its rally, maybe there's some more speculative small caps. Definitely saw gold the other day. Gold had a pretty big pullback. So should probably talk about that a little bit. That is a exhaustion extension. So you can see price got all the way up. It got exhausted. This is forgot the specific name of this. It's basically like a doji candle, where price is indecisive. But when you're looking at this and you're looking at the 52-week highs, one of the things that I've been studying and seeing is when you have these 52-week highs and they start topping like that, multiple top, and then you have this extreme push above. When you have this extreme push in price and the relative strength shoots up like that, and then you have a candle that is an indecision where it's more like an exhaustion, and then today you have this big pullback down. That is typically the end of the trend. That is typically the end of the trend. All of these indicators, the multiple 52-week highs, the candle price action, and the following day candle price action. These are all indicators. The one thing that you could say is that it found support on, the 10 EMA, but it can very quickly and easily just kind of break down from there, just based on these past two previous candles. So not that great there. So yeah, price action not looking too good right now. It's best to study. Don't be a gambler. Study. Spend time marking up charts, working on your setup. Go outside, touch some grass, do something. But yeah, that's about it for today.